Hey there, friends. Let's talk about something that's left a lot of folks scratching their head this week. The Federal Reserve dropped their rate this last week, but mortgage rates actually went up. What gives? It's like the classic Charlie Brown moment, right? It feels like Lucy just yanked the football away. We thought we were getting lower mortgage rates, but instead they went up. Well, let's talk about why. The Federal Reserve controls the short-term rate, which influences things like credit cards and auto loans. But mortgage rates, well, they play by their own rules. These rates are based on the bond market and investor expectations about inflation and the economy. Much of any adjustments are priced in way in advance of the changes and then make volatile moves based on what Jerome Powell says during the press conference. When the Fed lowers the rate, investors sometimes think, uh-oh, is the economy slowing down? If they see inflation staying high or other risk, they'll demand higher returns on bonds, which pushes mortgage rates up. It's a bit of a chain reaction. My personal opinion, I think there's a lot of speculation on how the stock market will perform over this next year, and that counters mortgage rates too. Plus, inflation is not really reined in yet, and the speculation on what may happen with policies over this next year could cause inflation not to go down as much as we had hoped. Now, here's the interesting fun fact. Many think that prices may go down on things like groceries and household items, all the things that we have seen an increase so much since 2020. But there's no indication of deflation, which that actually means that prices go down instead of up, which is inflation. The only times this has happened historically was in the Great Depression for 4 years, from 29 to 33, a 7-month minor dip in 2009, and a couple-month flatline in 2015. Prior to those 3 times, it was the Civil War. Yeah, that one in the 1800s. So, doesn't happen very often, and so don't expect the price of eggs to go down anytime soon. What happens is wages are increased to compensate for inflation. But that's just going to take time, which is partly why we haven't seen rates recover yet. The good news, home prices are not expected to see huge changes. While mortgage rates have been higher than we hoped, the opportunities to get discounts and closing costs to get in with less funds out of pocket are greater. So if you've been waiting, don't want to sit on the sidelines for too long. If you're looking to buy or refinance, let's chat. I'll help you navigate this market and make a game plan. No Lucy-style surprises here. Remember, the key to winning is staying in the game and knowing what your options are. Let's do this together. Don't be a Charlie Brown. Let's kick that football together. My name is Dawn Robbins, and I look forward to helping you.